All right, let's get some analysis on what we should be watching out for, what to expect for the day ahead. Chris Weston joining us from IG in Melbourne. Chris, just firstly, the loss is really accelerating towards the end of trade there on Wall Street, despite that better than expected economic data.
Yeah, look, I think people are sitting on their hands at the moment. I think it's going to be thematic of what we see into the back end of the year. We've had, obviously, everyone knows that we've had a very good year in the US, and we're coming into a very, whilst December is a very strong time to be holding US stocks as it is with Australian stocks, we do have a big week ahead of us, and you're right. I don't think there was any major smoking gun behind the tail-offs towards in the S&P and the Dow last night, and certainly the Russell, the small cap index, fared slightly worse, down over 1%. But I think what we have learned last night is that manufacturing and the world continues to be very strong. Probably the exception there is that Spain is seeing contractions, as is France, although France was a little bit better than what was expected and certainly revised slightly higher. And of course in Australia, where we saw that big tick down in the last month, and that's well get into contractionary territory at the moment. But in the US, we've got the highest reading there for quite some time. If you look at the subcomponents of that, the employment number very strong, the new orders component there, the highest level since 2011. The European PMI numbers there, German numbers at 2.5 years high, the Italian numbers at the highest level since 2011, the UK, China as well, and regional markets as well looking very strong. So manufacturing is looking okay. I mean, that's thematic now of global growth being around 3.5 to 4%. And I think as a result, we have seen some dollar strength coming through last night. We did see the Aussie dip below that 91 handle, and it has come back a little bit there. Cable and Euro seeing some decent falls from those highs after the European session as well. So I think no real smoking gun behind the tail off, but I think we need to remember that we are a lot of traders are sitting on some very good money, and people are very, very bullish at the moment, if you see that in the sentiment readings in the US at the moment. So just a bit of a tail off, but good support coming through on that 1800 level on the S&P last night.
In terms though of the falls for miners, I mean, obviously what related to the falls in commodities, and what was behind that then, just the strength in the greenback?
Yeah, I think we saw a bit of a mixed price action, didn't we? I mean, iron ore obviously doesn't really track that US dollar as much as other different commodities did. Iron ore stays very high, stronger, and actually benefits nicely, because if you put it in Aussie dollar terms, we're seeing it around that $150 per ounce or per tonne level at the moment, and that's near the year's highs, around that 155, 160 level. But I think what we did see when you see that when the dollar gets stronger, you see gold really coming under pressure, and gold's really come off quite sharply from yesterday's close. I mean, we're down about $20, $25 or so from yesterday's close. That was one-way price action. The bears were fully in control. I see absolutely no reason why I'd be holding gold at the moment, especially when US yields are moving up towards that 280 level at the moment. It's an opportunity cost, and that's really, if you look at the trend is down there. Copper as well seeing falls. You probably expect to see copper up on a day when you see those ISM manufacturing numbers higher, but I think I did hear you say something about Russia potentially cancelling some orders or so. So I think that may have had a situation, because if you look at WTI and Brent, they actually rallied last night. So there was some mixed moves, and a lot of it really didn't make a huge amount of sense. But I think if you're trying to tail the strength that we saw in the greenback last night, then you've got to be looking at gold, and that inverse correlation is really stuck in last night.
Yeah, just in terms of what that means then for the ASX 200 today after that 7-week low yesterday, what do you think?
Yeah, down. We're calling it down 0.5% today. So I think that there's a lot to look out for. We've got the current account balance, of course, and that's going to have implications on tomorrow's GDP read. The retail sales numbers could have, obviously, going to be looked at very, very closely because of that transition away from the mining space into the non-mining space as well. So that's something that the RBA and the market will be looking at very closely. And of course, I think RBA later on. This is a dollar play today. I mean, I don't think the equity market's going to see the sort of volatility that we saw, we have seen prior. But I think this is an Aussie dollar. Aussie dollar's going to be right at the heart of it. The bond market here in Australia is going to be right at the heart of it, especially ahead of this $1.5 billion 5-year issuance that comes out on Friday, the biggest I think in about 2 decades. And I think that's going to be something from fixed income land. So I don't see too much volatility. The volatility, I think, probably stems from a move in offshore markets. And if we look at the moves that we saw yesterday in for example, the Shenzhen and the Chinex market, which is the smaller cap index there, the growth stocks, the new stocks which are coming to market, really got hit very hard because of this changes the potential to the IPO pipeline, and that could have ramifications on our market. So I don't think the data today has a big implications on the equity market. I think, you've got to look at the banks and clearly, they saw decent price action to the downside yesterday, and of course we've got to look at the miners as well. And from what we're seeing at the moment, modestly downside moves in the miners based off some of the ADRs we've seen overnight.
Just very quickly then on the RBA, no change expected is what we're hearing from everyone, but what, you thinking that we might get a slight change in the language of the fall in the Aussie dollar?
I don't think we will, and I hope we don't, to be honest, Bridie. I hope we see them maintain that uncomfortably high metric. That's the situation that could change. The Aussie dollar on a trade-weighted basis since the 5th of November, when the last meeting was on, has fallen about 3%, 4% against the greenback. It was 3% on a trade-weighted basis. So the question is will they change that? Glenn Stevens recently said in a recent speech that the Aussie dollar remains about 10% overvalued on their equilibrium. So I hope that they use the momentum to the downside at the moment to keep that easing bias in there, I suppose the mild easing bias that these guys have got, to try and push it below that 90-cent handle over time. And good non-farm payrolls on Friday will clearly do that. So I hope they don't change things despite that, and they use the momentum in the currency to try and keep that easing bias in place and push it towards that 90-cent handle.
Chris, as always, thanks so much for taking us through all of that. Chat to you through the day.
Thanks, Bridie.
Chris Weston there from IG. Let's get some more on what